Ever wondered why markets move more on psychology than logic? Let's dive into behavioral finance. Imagine this: the stock market isn't a cold, rational place driven only by numbers and calculations. It's a theater of human emotions, biases, and perceptions. And that is what makes behavioral finance fascinating. Here's the kicker: traditional finance believes markets operate efficiently, decisions are rational, and prices reflect all available information. But behavioral finance? It flips the script. It says, hey, humans aren't robots. They get emotional, they make mistakes, and they let fear and greed influence their trading moves. This switch in perspective is crucial for traders, because understanding how investor psychology drives market movements can give you a serious edge. Take a moment to think about it. Why do market bubbles happen? Why does panic lead to massive sell-offs? These aren't merely numbers running on algorithms. They're psychological dramas unfolding in real time. Knowing these patterns allows you to see the market beyond its surface and identify opportunities others miss. Behavioral finance incorporates concepts like cognitive biases, herd mentality, overconfidence, and loss aversion, all key mental traps that shape how markets behave. These ideas don't just explain past market phenomena, they arm traders with strategies to predict future moves. So, how can you apply this? If you understand, for instance, that investors tend to overreact to big news, jumping on trends early, and then creating exaggerated ripple effects, you're positioned better. You'll know not to chase momentum blindly, but rather analyze when the herd might be steering the ship off course. In this series, we're unpacking key psychological forces at play. From why traders chase trends even when it costs them, to getting inside the bubble bursts that flip economies upside down, we're covering it all. And guess what? By the end, you'll see how mastering market psychology can not only make you a better trader, but also keep your emotions in check through market chaos. Stick around this week, because understanding psychology isn't just a nifty skill, it's a trading superpower. Subscribe and follow to learn the psychology-driven tips that will elevate your market game. Join the crowd, a free weekly newsletter to help you trade with the professionals.